Thanks for joining us today on Market Call. I'm Morella Fernandez. Kim Bolton with us on the show. He's president and portfolio manager of Black Swan Dexteritas. Yeah, I'll take your questions on technology stocks. Here's how to reach us. 1-855-326-6266. You can email any of your questions in as well. That's at BNN Bloomberg. Market Call at bnnbloomberg.ca. Thanks for coming in. Good to see you.
Good to see you, Morella.
North American markets typically at the end of the year show strength. Not so much this year. There seems to be more volatility. What should we take from what has been going on the past, let's say, 2 weeks?
I'd say it's pretty healthy, and actually the market's telling you it's pretty healthy.
In what ways?
Well, you know, if you even go back, well, certainly 2 weeks ago or even 1 week ago, it was like everyone was trying to figure out, it's gone through support, certainly through the NASDAQ and the S&P, and it looks like it was going to go a lot deeper than just sort of that 5, 6, 7% correction. But, you know, you end up getting some good reports coming out of sort of that whole AI ecosystem, and people get back on the horse. So I wouldn't be surprised if, you know, it snapped back quite a bit. You know, it's NASDAQ's gone up the better part of 800 points in the last week. I wouldn't be surprised if you get some consolidation. I think this whole unwinding of the yen carry trade usually takes some time to work through. So I would say over the next couple of weeks, we'll get some consolidation. But I think in the last couple of weeks, I think you'll get a pretty decent rally.
Okay, so what do you think the tech story line change will be for the end of the year, if there will be one in the next few weeks? And take me into next year and what you think is the evolution of the tech story.
Yeah. Morella, I would say over the last 3 years, it's been pretty phenomenal. But I really look at 2026 as quite a change in the leadership that you're going to end up having. You know, you've had the better part of 3 years where you've had this whole compute infrastructure build out, certainly for the AI and the data centers and the cloud and so on. But I think what you're going to see in that space is a bit of a consolidation. People are going to be looking towards optimization of what they have, you know, get more money per dollar, per watt, and so on. But then going into 2026, I think there's going to be a sea change, a bit of rotation within sort of the technology arena. You're definitely going to have, and you're starting to see it, a lot of autonomy coming along. For example, in the likes of robotics and in the likes of software agents. But I think you'll also begin getting sort of that large-scale industrial deployment. And then finally, you'll get the AI starts sort of, you'll start seeing it through the economy and through enterprise and companies, starting with the large ones first, but going through medium and small size, of what the tangible economic gains are going to be in these companies and across the sectors. I think it's a big deal in 2026.
I think financials are already beginning to see some of that, right? Putting AI to work and getting efficiencies from that. But do you think this will be more sort of fanned out across the board?
Well, you can, exactly in the financials, but you're also seeing it in the healthcare, in transportation, and in entertainment. But it's the big enterprises that have the deep pockets that have spent the money so far. And I think you'll see it broaden out through sort of the large, medium, and small business.
All right. We're going to take a quick break. We will line up the first of our phone calls and emails for Kim Bolton, Black Swan Dexteritas, taking your questions on technology stocks. Here again is how to reach us. We're back in a moment. Welcome back. We're going to start with an email right now from Neil. He says, I'd like to get Kim's view on Micron. It is on fire lately. What's going on with Micron?
You're right. It is on fire. And normally, sort of in this space of storage memory, DRAM, NAND, and the whole high bandwidth memory product segment, it's usually cyclical, supply and demand. However, the demand is so strong coming from the likes of the, everyone involved in the AI and the data centers and the cloud. And it looks like it's going to extend. So, right now it's sitting, right around 233 to 234. We have a 12-month price target of 286. So it's still got a decent runway going forward.
Okay, that was Neil. Let's go to our first phone call. Al is on the line. He's in Manotick, Ontario, with a question. Hi, Al.
Yeah, good afternoon to you both. Mr. Bolton, Dell Technologies came out with great results last week. What are your thoughts? Thanks.
Okay, thank you for the question. Let's talk about Dell. We'll pull up the line chart in just 1 second. What do you think of Dell?
Quite admirable. You probably saw it the other day that Michael and Susan Dell actually put forward, what was it, $6.25 billion that was going to low-income and homeless families out there. So very admirable by him.
The Trump accounts.
Yeah, into the
Yes.
Trump accounts. But let's see.
So Dell looks like it's at 134, 133 is where we have it now. Down a little bit on the day and only 6% up in the year. What's your forward look on this company?
Yeah, we like it. We traded out of it, but more recently got back in. Right now, around 134. We have a 12-month price target of 164. Very, very comparable to the likes of, it's sort of the networking and the switches and the routers and everything that they're involved in, together with the screens and so on. The screens is what holds it down, but their networking is what, sort of holds it up. So it's a good play within the whole sort of AI infrastructure and networking side. So, we just wade back in.
All right, good to know. Let's go to Michelle on the line in Vancouver with a question. Hi, Michelle.
Hi, Morella.
Go ahead.
Can I get Tim's opinion on Visa? The stock has been declining for the last 6 months. Where do you see it going long term, and would you add more at these levels? Thank you.
Okay, thank you for the question. We'll have a look at where Visa is today, 330.44. It has been going sort of sideways and down since June, and looks a little more volatile than we're normally used to seeing it, I think. But Visa, we know, owns the payment systems. They obviously make very good money on that. Do you see any obvious reason for the trend downwards, first of all?
Absolutely, because there's a lot of other sort of consumer credit companies out there that are better on the digital side. And it's sort of similar, but they'll transition. So they're watching for them to actually transition and get more digitalized. And they do have sort of the Visa Direct and the B2B Connect and Visa Treasury as a service. They're trying, but they're struggling with actually integrating AI. As is sort of MasterCard. And that's why you get the likes of some of these digital credit companies that are flying pretty high.
How would a company like Visa or MasterCard use AI? Are there other systems out there that are using AI and using it in a better fashion?
That's a very good question. So I would say they can embrace AI for the betterment of the experience for their clients, rather than you can definitely use AI for the betterment and efficiency and more effectiveness of the business model, but the one place that they haven't sort of reached out to is to use AI to make the experience for their customer more pleasurable, right?
They have figured out how to make that work for them.
Right. You know, they definitely have done it for themselves, but they haven't done it for their clients.
Okay. All right. Let's go to Frida on the line in Chilliwack, BC, with a question today. Hi, Frida.
Hi. I'm interested in the projection for Shopify with Christmas coming and all the shopping. Thank you.
Thanks for the question. So Shopify reported excellent numbers for Black Friday with their merchants, and I know they had an outage more recently.
Yeah.
But they're saying basically it was sort of like $4 million a minute or something. People were racking up. It was some crazy. I'll verify what it was. But basically, their merchants did really well for the Shopify in the weekend that followed in the U.S. I imagine Christmas will be the same, but that depends on the health of the consumer. So, where do you land on that?
You know, I think for us, yes, we own Shopify, but it's pretty well priced at this stage. You know, it's had a good run up. Currently, what is it? 150. 156 US, 222 Canadian. But for the US side, where it's about 157, we have a 12-month price target of 174. So it's getting, you know, it's certainly within 10%. Normally, when we get within sort of that 5 to 10%, then we start to write some calls against the position.
Okay, but you think it's fully valued where it is?
Yeah, getting close.
Getting close. Would you hold it if you did
Absolutely.
have it?
We hold it, write some calls. You know, you can do them pretty short dated, like 1-2 week and 1 month, and you can use the strike price of, you know, upwards of sort of 175 to 180. And you can get some pretty good premium because the volatility is pretty high.
All right. We will take a quick break then. We will be back with Kim Bolton, Black Swan Dexteritas, taking your questions on technology stocks. Back in a moment. Welcome back to Market Call. We are going to Vic, who is on the line in Kingston, Ontario. He's got a question today for Kim. Hi, Vic.
Hi there. I'd like to have a question for Mr. Bolton. I am a shareholder of Quantum Emotion, and they appear to be having a number of contracts up and coming, and I was wondering what your thoughts are on whether it's a buy or a hold or a sell.
Okay.
Thank you.
Thank you for the question. I know Quantum Emotion does something very complicated. They're out of Quebec.
Yeah.
Can you explain a little bit more about what you know about what they do and what their future looks like?
You know, when Francis Bolito, who's the CEO, who I've talked with quite a few times, when he hears my answer, he'll just sort of shake it. But I'll give you the layman's terms. So they're involved in the quantum side, but more skewed toward the security of wallets, and they've developed this mousetrap, and it's just very cutting edge. No one else sort of has it, and it will be applicable in the whole quantum computing space and even into sort of the crypto side of things. And so they do have an edge. What I would recommend to Arden, you know, always hold, certainly in Quantum Emotion, always hold like a core holding. And I don't know what a core holding would be. For me, for Quantum Emotion, it's like holding around 1 to 1.5% of a portfolio. It's pretty small because it's a small cap. But you can, you know, as it appreciates, or you can take some money off the table And then as it dips, it allows you to actually buy in, because this is going to be around for quite a while. I've asked Francis if he's ever entertained anyone outside to buy into it, and they have no intention of doing that, because they see this is a long, long runway. So I guess what I'm saying, Arden, is keep a core position, but it is a tradable stock. So you see it spike, and then you also see it dip, and it gives you an opportunity.
So you just got to keep a watch on it. All right, that was for Vic. We're going to Arden now. She's in Ixtapa, Mexico. Hi, Arden. What's your question today?
To get your guest's opinion on Kraken Robotics. Would he buy it right now, or is this a hold?
Okay, thank you for the question. So Kraken does the underwater robotics. We expect them to get a boost from defense spending generally everywhere. That being said, I'm wondering how much investment is going into this specific kind of defense, underwater systems, and will they benefit as greatly as some of the other defense players that are out there? What do you think about Kraken?
They've done a remarkable job pivoting, because originally they were just sort of for treasure hunters underwater, and also for the likes of the sort of the underwater exploration for oil and gas. And then now getting into the defense, it's going to be a good barometer, but thankfully a lot of the sort of geopolitical conflicts around the world have not gone away, but they've certainly eased. And I think that's why you see it sort of come back down. You buy it on dips. The volatility of this stock is although it's a lot bigger than what we're talking about, quantum emotion. But it is a tradable stock, so keep a core somewhere, in this, and maybe it's sort of the 2 to 3%, and then as it grows up toward 5, take some money off the table. Likewise, when it goes down. All right, that was
Kraken Robotics. There. Let's go to Bruce in Simcoe, Ontario. He's got a question. Hi, Bruce. Bruce, are you there? Okay, I feel like Bruce might have put the phone down and left it there, but he had a question about Snowflake. Do you know Snowflake pretty well?
Absolutely.
Okay, tell me about them.
So Snowflake is a key player within sort of the cloud and the data centers, and it somewhat sort of like a data dog, but more in allowing companies to maneuver through efficiently, effectively through the cloud. So it's like a cloud-based data storage company, but it also has a whole bunch of analytic solutions that come out of it, with the like of, they have a Snowflake cloud data warehouse and a Horizon catalog and an OpenFlow. We own it. We like it. It's rich. So it's rich right now, because the average, now our price target is upwards of 265 to 270. So, it still has a little bit of room. But the average analyst out there has a 12-month price target of 231.
So where do you like it more? If you're saying it's a little rich right now, where would you buy in?
I would say we would buy in sort of around that, I guess around 246, definitely just in front of that sort of 231, sort of 233. And I don't think you get the final third, if it went down to sort of 215 to 220.
Okay.
I would definitely recommend that people buy it. Yeah.
Okay. I just wanted to clarify that Shopify number that we talked about for Black Friday. Peak sales per minute, $5.1 million on Black Friday at around noon. So incredible business for Shopify in the past week. All right, we're going to take a quick break. Kim's past picks. When we come back, stay tuned. Welcome back. Time now for past picks from Kim Bolton. These choices were from December 31st of last year, so New Year's Eve into the new year. At the time, Oracle was the recommendation at 166.64 US. It's gone up to 202.28. So a 22% upside, 23% total return. Do you remember last December what tweaked your interest in Oracle?
Yeah, absolutely. Going back a year, it was all about the compute infrastructure for the AI, and the leadership was coming through. Certainly on the cloud side was AWS and Google and Azure from Microsoft. We had done some digging down drilling within Oracle, and we just had this feeling that there was room for another leader. Oracle had been ignored, and we lucked out. So it was the right thing. Now you can see if you look at the 1-year chart, it's been pretty volatile. We recommended, I think it was at around 166, and it got well over 300, and here it is. It's pulled back to 204, and we're still up 20%. This is definitely a buy here.
At this level?
Absolutely.
Okay.
And the reason everyone is leaning into it is because there's been such a huge build out that they've had to go out and borrow an enormous amount of money.
Yes.
Tens of billions of dollars for these data centers. And it sort of reminds me of sort of the debt burden of, federal governments, Canadian, US. But we work through it. And I think Oracle will work through it. And I think people will look back that this was a great buying opportunity. Not only for sort of the cloud and the data centers, but they have a whole suite. It's not just the software. They have a whole suite, very much like Microsoft on the software side, which is going to absolutely balloon next year.
Okay, let's get your next past pick from December 31st of last year, which was Alphabet, GOOGL, Google on the NASDAQ. 189.30 at the time, now to US 319.70. So 69% upside, 69% total return. Is there room to grow for this company? It escaped a penalty or heavier penalty in the US that some thought might throw the company off track over monopolization. It escaped that.
Yep.
It's doing fairly well with how it's using AI to better target, I guess, their client. And they're sitting on a wealth of information from search engine. So is there still room for Alphabet to grow? Do you still like it?
Morella, you just said it.
A lot.
No, like you said it so succinctly. It's interesting because if when everything started 3 years ago in November of 2022, when OpenAI came out with the announcement of Microsoft investing $10 billion and the whole revolution started, everyone really leaned into Alphabet because they felt they were slow. However, they've really excelled because for exactly what you said, Morella, they are the ones that control the pipes. They control the chips now because they have those tensor processing units that compete with the likes of the GPUs out there. Now, mind you, it's more for the software side rather than for the hardware side. But then, so they got the pipes, they got the chips, and then they got the screens, the eyeballs. So they've got it all. And that's why it's taken off.
Have you trimmed your position at all in Alphabet?
Yes, because we never hold more than 10%. And, we probably started off, 3 years ago, we probably had, a 5% position. Now it's grown up to, the 10%. When it goes over 10%, we trim it. We used to write some calls against it. However, there's so much tailwinds with this company. Just a miraculous story.
Okay. Let's move on to your third pick from December of last year, which was Monday.com, MNDY on the NASDAQ. It was 235.44 US at the time. Now to 149.80 US, a 36% drop return. Same for total return. They do cloud systems as well, sort of. If you can expand, they don't do they do storage, or do they do something else with the cloud platform?
Yeah. So Monday, currently trading around 152. So Monday.com's focus is in low-code, no-code technology. In other words, you don't have to be a coder or developer. And then, they offer up software applications, especially work management tools to allow collaboration within enterprises. But they've expanded that to actually into operational side, into human resources, even into the financial side of a company, like the CFO suite. But they're a small company. They reported back on November 9th their Q3 revenue. So when you talk in the likes of Microsoft and Google and all these others that have billions and tens of billions of revenue every quarter, these guys in Q3, they had $317 million of revenue. And then they take a 40% haircut because everyone gets worried about it. But it's cheap now. And they definitely have leadership within this sort of no-code, easy for developers and non-developers to do that sort of work management. So we really like it. We recently added to it. The valuation is compelling. It's trading at around 14 times fiscal year 26 free cash flow, about 4 times on the revenue. So it's cheap. And
You're sticking with it.
well, we're adding to it.
Okay.
Yeah.
All right, we're going to take a quick break. We'll be back with more of your questions for Kim Bolton, Black Swan Dexteritas. Again, your questions today on technology stocks. Back in a moment. Welcome back to Market Call. We have Charlie on the line. He's in Montreal, and he's got a question today. Hi, Charlie.
Hi, thank you for taking my call. I'm calling about Uber today. I'd like to start a position on it, but I keep getting mixed reviews on Bloomberg between different guests. So I would like to Mr. Bolton's opinion and if he thinks there's still a lot of upside to it. Thank you.
Thank you for the question. Uber coming up 24% in the last year. It's at 90.92 today. Drop off a little bit here. Do you invest? Have you invested in Uber?
Yes, and actually we don't own it. And Charlie, thank you for reminding me because I'm just sort of pulling it up here. And you know, for us, it actually has a pretty good runway ahead of it. You know, it's trading just over $90 right now, 12-month. We have a 12-month price target of $111.50.
And the highest it's gone so far has been $100.10.
Yeah.
Which I guess was last month.
Yeah.
October.
So, and our projections are actually looking forward of how the financial metrics are looking. And we definitely see it sort of going through that 100 level and getting all the way up within 12 months up to that 111.50 area.
Is it geographic expansion they could get growth from? I don't know what they're doing about partnering for the autonomous. Some see a lot of growth there. Some see maybe limited growth in autonomous. Where do you think they will get upside?
I think they're going to get geographically, because, their strong points are definitely within North America, but, they can expand, certainly. I was just in Delhi, and so Ubers are everywhere. Very different from here because they have big signs on the sides of the cars.
So they're identified.
Yeah. So geographically, I think one of the reasons they got a lift recently is because they partnered with Hyundai on the robotaxis, which is going to go into competition, of course, with Tesla. And like robotaxis are going to be a big deal, probably, in the latter half of 2026. But I think that area is probably an area that will give it a boost. Yeah.
Okay. Uber, some upside there. If you want to start a position, would you start a position where it is right now? $90? You would?
Yeah.
Okay. Let's go to Ralph on the line. He's in Victoria, BC, with a question. Hi, Ralph.
Good afternoon, Marilla and Kim. My question is regarding Arista Networks. I'd just like to know if Kim sees some upside still in this company. Thanks. I'll listen to your answer. Thank
you for the question. Arista is another sort of cloud services provider. It's at 127 today, up 320% over the last 3 years. And like many of the tech stocks, come down a little bit sideways now.
So Arista actually started out in 2004. The guys that actually started it were some senior fellows from Cisco.
Okay.
And they went head to head, and they went through a lot of lawsuits for a better part of 10 years. But they came out of it. And so, we were just talking about a half an hour ago about Dell. But Arista is more of a pure play in the connection within the data centers and within the cloud. So they're a pure play when it comes to networking, into Ethernet switches and routers, which was more cutting edge than some of the other, like Cisco had out there. So currently trading around 127.5. The average analyst out there has 160, 12-month price target. We have a 164. So it has a decent runway ahead of it. So we definitely own it. And if you don't own it, I'd buy it here, and you could also pick it up down around sort of 120, maybe down sort of between 110 and 115. I don't think you'll see it. But
anything under 120, essentially.
Yeah.
Okay. Okay, let's go to Anita. Anita's on the line in Markham, Ontario, with her question. Hi, Anita.
Hi, good afternoon. Thank you so much for taking my call. My question is on Constellation Software. I do own a bit of it, and I did very well, but of late it's come down, and I'm slightly under. Your thoughts on this company, please, and is it a hold or a sell?
Okay.
And Marilla, could I have a street consensus on this, please? Thank you.
Okay, so let's talk about Constellation Software, because there's a lot to unpack here. Of course, its longtime leader has had to step aside, and I think that has got people with questions about their forward leadership, as well as the business model of taking over essentially software companies and making them work a little bit better. And the model, that sort of model, is that a model that's going to be sustainable in the future? When you look at Constellation Software, what are your thoughts about what happens to this company in the future and where it can still make money?
Yeah. Doesn't this remind you of Berkshire?
It does, yes.
Right? Where the patriarch steps aside. And then you have the new management that comes in. But what's his name? He was the president.
Abel.
Yeah.
Yes. Who's Canadian, apparently.
Yeah.
Yes.
And, he's been there since the beginning. He was instrumental in this whole thing. But people are waiting. We owned it. As soon as it went through 3,500, we lightened up. We'd love to get back in. But certainly in situations like this, what I find is that you need to go through a couple of quarters and just see how they're performing and how the new regime is working through it.
Okay, so give that some time to play out. Okay.
Yeah, but it's a fantastic company, a very proud Canadian company out there.
Okay.
Yeah.
And by the way, she had asked for consensus ratings. So buys 73%, holds 26%. So 14 buys and 5 holds is what we're looking at now. We're going to take a quick break. When we come back, we'll hit the phone lines again. Back in a moment. Welcome back. And let's go to Terry on the line. He's in BC with a question today. Terry, what is your question?
Hello, my question today is about Galaxy Digital. It had quite a good run-up, and it's kind of pulled back. And I just wonder what Mr. Bolton's thoughts on it were.
Okay,
Thank you very much. I'll hang up.
So they do build-out for data centers kind of thing, Kim?
Yes, but they're more sort of like a technology-driven financial services company, going all the way from asset management to investment banking, even into principal investing, and like digital infrastructure services such as mining and staking and custodial technology. I always look at, and whether it's right, but the way I look at Galaxy Digital is that they're sort of like a mini Coinbase. And it becomes like a barometer of the cryptocurrencies. And I like that because I'd much rather, you've seen like Bitcoin go from, 120 down to 85.
Yes, 85, 86.
Yeah, and then it sort of popped back up to 93. Now, this is a real company that makes real money, has, it's a $17 billion company. And, they had revenues in Q3 of like $29 billion. So it's a real company. And I like, if you believe, with Bitcoin sitting down here at like 93-ish, and you think it's sort of established a base, I like buying into the likes of like a Coinbase or a Galaxy Digital.
Okay.
Because it's a real company. Yeah.
All right, let's get to a last email, which is from Bill. He says, could I please get your outlook for Netflix? Netflix seems to be the dominant streaming service, generally speaking, and I'm wondering, is this a company that will continue to grow, you think, by just expansion to other countries and by acquisition as well? It looks like there may be some acquisitions to come.
Oh, are you sort of Warner Brothers?
Yes.
Yeah, exactly. But that would come with a pretty steep price tag. But, being the king of the heap, you do have to do Stranger Things. And so, right now, it's sort of 104.
103, yeah.
We actually have a 12-month price target of 134 and a half, which is why we like it. But, even here, it's not cheap, but, I'd suggest buy some here, and you could get some down in sort of the mid-90s, and I don't think you'd see it. Now, Netflix, it is the global streaming leader. What do they have? Like 300 million paid subscribers around the world. Biggest leader in streaming out there. The market outlook is good. Even at 104, it's trading a bit rich because the PE is sort of around the mid 40s. Okay. And there is some competition in it, but, it's the leadership, people love to stream, and so you go for the leadership. And Netflix is an obvious.
They're definitely winning that. Okay, we're going to leave it there for now. We have to take a quick break. New top picks from Kim Bolton when we come back. Join us tomorrow for Market Call. Rebecca Telscher will be on the show. She's a portfolio manager at New Haven Asset Management. She'll take your questions on Canadian stocks. And time for new top picks from Kim Bolton. Microsoft is where we start. MSFT on NASDAQ with the big 7. Why do you like Microsoft? And if you could share your price target on it as well, that'd be great.
I don't know if you saw it earlier today that Microsoft actually announced, and I think it was just a handful of people that some of their clients were shying away from adding to their infrastructure side. And we just talked about that during the program here. Not that people are going to stop buying, but they've already bought and they want to see how it works before they buy some more.
Makes sense. Makes good sense.
And then when I heard that this morning, I went, oh my God, Microsoft is going to be down. It's one of my topics. But I think Microsoft's, recent pullback or sort of consolidation in here is a great opportunity. They certainly still have, about 40% of the revenue comes out of the Azure, the cloud side. CapEx, capital leases are still very, very strong. It is sort of pressuring the free cash flow, but we expect, to see a significant decline in the sort of coming quarters on the free cash flow. Its forward PE and equity value versus sales multiple are in line with their 5-year averages. So it is a good time to buy a leader. And it's sort of similar to what we were talking about, but on a bigger scale, of what we were talking about on Oracle, because they have so many horses in the horse race. On both they don't have the screens, but they got the leadership in the software, they got the leadership in the hardware, leadership in the AI.
So several irons in the fire.
Yeah, and it's currently trading around $485, $490, and that's why the average price target out there is $625. Even though people talk about this market being pretty rich, there's $125 on the table. It's 20-25% this year.
Okay. Let's get to your next pick, which is Meta Platforms, another well-known company, Meta on NASDAQ, and spending a lot on CapEx. There were concerns about that. Why do you like Meta?
How many times have I been on this program and I say, wow, it's sort of equal valued, but like Microsoft and Meta, it's a great opportunity. It's currently trading around $645. The average analyst out there has a 12-month price target of $805. We have it at $825. They've spent an awful lot. One of the reasons it got hit, and probably rightly so, was because they announced that, $15.5 billion tax bill. They didn't think it was significant, but when
everybody else did, yes.
Everyone else did, right? And so
that was a one-time charge.
And so they sort of got a penalty call on them, but they're outside of the box now, and they have so much going for them on sort of this whole AI-driven engagement with ads and infrastructure and consumer platforms. But then I really think one of the hidden gems within this group, within Meta, is the WhatsApp.
Okay.
And they've only just started to monetize
that. I got to leave that one there because I want to get to your third pick, which is Walmart, which is using AI in all different kinds of ways. Is that why you picked it?
Absolutely. And everyone's probably shaking their head, Kim, why are you picking something that is trading at all-time highs, up at 113? We have a 12-month price target of 131. You know, it's only $18 on that, but you know, it's still a decent return. So I would actually get a position in here, right here, and then maybe add to it down around 105, and then down at 100. Without a doubt, Walmart effectively runs the largest AI-enabled physical and digital commerce network in the whole world. This is what every retailer seems to be able to do. And they've done it. And it's just going to pour down to the bottom line.
Okay, we got to leave it there. We are out of time. Kim Bolton, thanks for coming in. We'll see you again soon.
Thanks, Morelli.
And thank you for joining us today on Market Call. We'll see you back here again tomorrow.